Hinduja Foundries is also lower. Earlier today, Ashok Leyland, remember, announced a merger with Hinduja Foundries, signaling the start of a partnership that Ashok Leyland says will bring it significant synergistic benefits. But the street is quite worried about the fact that Hinduja Foundries has been loss-making since FY12 and has accumulated losses of more than 1,000 crores. So, in effect, the merger would impact the profitability of Ashok Leyland itself. CNBC TV 18's Jude spoke to the company's CFO, Gopal Mahadevan, on how the merger will impact Ashok Leyland's earnings. Listen in.
There has been quite a bit of turnaround that has happened, and in the previous years there were exceptional charges which have been taken. The organization definitely, HFL, is actually getting a lot leaner. We have had a shutdown of the Ductron unit. We have had a VRS coming in. So as we speak, actually, I have seen a couple of months of performance where the EBITDAs have been positive. In the medium term, as I've shared with other investors, I believe that this acquisition will be accretive to Ashok Leyland.
All right. Now, so moving forward, how much do you expect Ashok Leyland's debt to rise once this merger is completed?
It's not going to be very significant. HFL has about 500 crores of debt in its balance sheet as on date. But I think we would also see a certain amount of cash generation happening after the initial possibly 12 months or so, and this should peter out shortly. So the impact is not very significant on Ashok Leyland.
All right. And you said over the con call, the next 2-3 years could see Hinduja Foundries being earnings accretive for Ashok Leyland. So could you give us some numbers on that front?
I will not be able to share numbers, but what I can share is direction. See, there are opportunities that we see in foundries operations. It's a very good gross margin business. And I just want to step back and tell you the rationale of this merger as well. We must understand that foundries is a very, very critical supplier to Ashok Leyland. Almost all its casting requirements come from foundries. The second one is Ashok Leyland itself has a financial investment in foundries. You know, we have 324 crores of preference capital inside. The third part of it is that foundries has accumulated losses of more than about 1,000 crores. The fourth one is both the new foundry management and Ashok Leyland believe that there is a smart turnaround that is possible. Now, given all of this, the best thing to do is to merge both these operations because we get the benefit of the tax losses, we get the HFL shareholders get the benefit of getting into a larger company.
Moving on, Hinduja Foundries registered a loss of 394 crore over the last year. How much do you see that number falling in the next 2 years, maybe?
Again, what I can just tell you is that when I'm sharing with you that we expect it to be accretive to Ashok Leyland, obviously all of that 394 crores has to evaporate. So hopefully that should happen over the next 2 to 3 years.
All right. And last question: what kind of a drop do you foresee as far as Ashok Leyland's margins are concerned going forward?
Well, we'll have to wait and watch. There would be, for the initial period, there could be a drop in the margins at the PBT level, but then in the first year, we're hopeful that we would get to see some benefits of the tax as well.